Stocks start the week on a positive note, but caution still lingers on the street. IT, autos and pharma stocks charge up, but realty as well as cement pull back.
Outperformance by the O2C business powers and earnings beat for Reliance Industries, and analysts see healthy refining margins and the exploration business driving growth in 2023.
Ultratech skids despite good volume growth as realizations fail to perk up, while JSW Steel slips despite strong earnings on steep valuations.
And Bank Nifty charges up after biggies ICICI Bank and Kotak Mahindra Bank report record high income and margins. Mid-cap banks like IDFC First Bank and RBL also post strong numbers, while Bandhan Bank claims the worst on stress is behind.
Hello and welcome to Business Lunch. I'm Nisha Podar, and with me as always is my co-anchor Pavitra Parekh. So Pavitra, on a positive note, the market has opened today, but we have to still see the trajectory. It's not like it's going strong at the moment. So even though in the green, Nifty 50 holding at 18,000 levels, but below the 18,100 levels, which it had opened at. Mid-cap universe is the one to look at in line with the key indices, but it's the Bank Nifty, which opened with most amount of gusto today and has now tempered down, but still showing huge amount of outperformance as far as the key indices are concerned. On my screen at the moment, Ultratech Cement as well as Grasim, two of the Aditya Birla Group companies, Nifty 50 stocks are the ones which are the prime ones which are dragging Nifty 50 in terms of percentage. And apart from that, NTPC, Adani Ports, JSW also not doing too well. Eicher Motors, DV's Lab, Sun Pharma are some of the gainers at the moment. Advanced decline ratio pretty much neck and neck, but in favor of the declines at the moment, Pavitra.
Oh, absolutely. So like you said, it's not looking too bad, but we have been trading in a range, pretty much what we've been seeing for the past couple of weeks as well. Around 60 points gone from the top, so that is something that you should watch. The banks are doing quite well, and in the past few minutes, or the past hour or so, you've really seen IT climb up. So the Nifty IT is once again the top sectoral gainer, so that one will come up for you. A lot of the tech stocks are the high point of the day, so whether it's the Tech Mahindra, Wipro, all of these are the high point of the day. The PSU index has been doing very well, that is the CPSE index. It's up over 4% for this month, and there you have it. Nifty IT is also up 4%, so that's what's going up on these stocks. On the downside, you are seeing the cement names like Nisha was mentioning. You have Adani Enterprises, which is seeing some cuts, and some of the new age companies, the likes of Nykaa, which by the way for the month are down almost 20%. So that's something that we're watching. But let's now kickstart the show and take you through the currency move that we've been seeing. The Indian rupee strengthened nearly 0.6% in early trade, making the dollar as cheap as 80.89 rupees. But the dollar has since then climbed back a bit. So Lata is here with what's really driving the Indian rupee. Lata.
Yes, the dollar really got cheap, below 18.90 for a bit in early morning trades. We last saw that level in November 14th. So it's a two-month low for the dollar, a two-month high for the rupee. The reasons are not far to seek. One, of course, the dollar is weakening globally against most currencies. The dollar index has gone to 101 point change. That's a far cry from the 114 it used to trade. The other reason is that traditionally in the fourth quarter, the rupee strengthens because this is the quarter when the exporters bring back their dollars. So there is more dollar flow and hence a rupee strength. But separately, at the lows for the dollar, the RBI has come and bought dollars is what dealers tell us. And that's pulled the dollar back to, 80, 81, 10, 81, 20 levels. Now, the reasons for the RBI buying could be that the rupee has, there is something called the real effective exchange rate for the rupee, which we get every month. So the December bulletin, which was released last week, told us that as of December, the index has fallen below 100, which means the rupee is actually weakened versus 40 trading partners. And therefore, a little bit of appreciation is something that RBI won't mind. As well, a lot of Asian currencies have appreciated, more particularly the Hong Kong yuan, which is appreciated very strongly from October-November levels. And that's why a little bit of appreciation of the rupee will perhaps be permitted for fundamental reasons as well.
All right, Lata, thanks so much for giving us all those details about the rupee movement. Now let's move on to some of the stocks which are in news today. And the top one is the top index loser in terms of percentage is the Ultratech cement stock. And the numbers were actually largely in line, but it is the realization miss which is really weighing on that particular stock. And also keep on your radar Grasim, which is also the holding company of Ultratech. Both of them have been dragged down. Nigel D'Souza, our in-house cement expert, is right here to take us through the analysis and what's really impacting the stock movement, Nigel.
Well, that's right. Ultratech Cement's numbers are more or less in line, but the lower realizations or, the increase of just around 0.5% in comparison to around 2% that the street was working with on a sequential basis seems to have spooked the street. And that's why it's not just Ultratech, the other stocks as well reacted negatively. Let's run you through the management commentary. Now, the street was hoping maybe there'll be some kind of clarity on the cement pricing itself, because first look at the numbers, well, it appeared that the realizations were a miss. But the management says that cement prices are likely to be stable. There's no concrete guidance in terms of price increases. And the street, well, they would be working with higher price increases for the fourth quarter as well as for FY24, which appears to be a little bit on the back burner. And profitability will be driven now by operating leverage. That's capacity utilization levels are likely to move up, as well as savings in terms of RM, raw material cost as well. They did say though that demand is rock solid, and ahead of the election year, well, you're expecting demand to see a good pickup as well. So utilization levels for the past quarter were around 83%. They're expecting it to go up in quarter four. The blended cost, of fuel in the past quarter was around $200 per ton. It didn't reduce on a sequential basis, but in the coming quarter, well, it could reduce by around $20-25 per ton, which will translate to roughly around 150 rupees on a per ton basis. The overall cost trend, though, is likely to stay up because of the ongoing conflict between Russia as well as Ukraine. Point number one, China reopening, and no additional petcoke capacity coming on stream. Finally, capex, they're guiding for around 6 to around 7,000 crores per annum for the next few years. The numbers were in line. The problems in terms of realizations, volumes were solid, but clearly the street got spooked on the back of the realization miss as well as the commentary on pricing as well. Back to you.
Oh, absolutely. Nigel, thanks a lot for taking us through all of the details. It is the top loser on the Nifty today, down almost 4%. But the other stock that we're looking at is JSW Steel. The stock is under pressure despite a good showing in Q3. Earlier today, we caught up with the management to discuss how they really see things moving from here. So let's listen in to some of those comments.
As on date, the landed cost of imports vis-a-vis the domestic prices are at a discount to the extent of 5 to 6%. There will be more exports in the Q4. With that, we will be able to do more volumes, and there will be definitely an improvement in the overall EBITDA margins in Q4 with higher volumes. Considering the release of money from working capital, plus appreciation of rupee which is happening in this quarter, plus cash accruals that can happen in this quarter, all three together we will be able to reduce our debt.
All right, so that was about JSW Steel. Moving on to Adani Enterprises, 20,000 crore rupees FPO. That is all set to open this week on 27th of January ahead of the opening. Let's also listen in to what Adani Group Chairman Gautam Adani had to say about this.
This Adani Enterprises FPO is a part of our 10-year capital planning cycle, supported by a fully funded and a de-risked growth plan that is aligned with the India's growth story, aligned with our capabilities, and aligned with the needs of our India's retail shareholders. Our intention with the FPO is to expand our share registry with a specific focus on our India's retail investors. The FPO is a validation of our intent to bring in new public equity investors as our shareholders.
All right, that is the word coming in from Gautam Adani on the 20,000 crore rupee FPO, which opens this Friday. But with that, we're going to get into a short break now. When we return, Yes Bank and Bandhan Bank are on our radar. We'll tell you why after this short break. Hey guys, welcome back. You're still tuned into Business Lunch on CNBC-TV18. The market is trimming its gains for now. So it is just around 55 points higher on the Nifty, like you can see on your screen. You have a lot of, pressure which is coming through in some of the banking names. So ICICI Bank has slipped and it's pretty much at the low point of the day right now. Yeah, that will come after you. It is at the low point of the day, so that is dragging a bit. You have Axis, which has slipped. HDFC Bank also, which has slipped. And Reliance is seeing some kinds of cuts, which is weighing on the overall market. But let's talk about some individual names now. Yes, Bank is under pressure and it's reacting to Q3 earnings, which were quite a mixed bag this time around. While stress has declined, the bank has also lost market share sequentially, with loan growth coming in at a 6-quarter low and return ratios also looking quite weak. What's putting additional pressure on the stock actually is that the Bombay High Court has quashed the bank's decision to write off around 8,300 crores of AT1 bonds. So here's what the MD and CEO Prashant Kumar had to say when we spoke to him earlier this morning. Listen in.
So it is confirmed that we would make an appeal in Supreme Court, okay? And we have been given 6 weeks. Until that time, there is a stay on the order, okay? So that is one part. But we'll make an appeal, and we have the legal opinions which are having very strong grounds for making an appeal in the Honorable Supreme Court.
All right, so staying with the banking space, that was Yes Bank. Let's focus on Bandhan Bank and the earnings update as well. It was a weak set of numbers for Bandhan Bank in the last quarter, with net interest margins also coming in at about 20-quarter lows. Listen into what the management had to say about the trajectory going forward.
If you see that the 14% growth has come to this, up to the third quarter and fourth quarter, it will come to the 20% and above. No, if you see that the loan growth, we are predicted on that at 2025, and that the CAGR 22 to 25% growth will come.
All right, that is the management of Bandhan Bank. But something more that we want to bring up to speed with, the MSCI will announce the changes from its semi-annual index review in the second half of February. So Vivek is here to tell us about some of the likely changes that we could see. Vivek.
Well, that's right. So what we've done is we've done a roundup of all of the passive indices news flow that we need to track. So first on our radar are the list of MSCI likely changes. And remember, the MSCI will announce the list of likely inclusions and exclusions on February 12th. So as per Nuvama research, there are 2 likely inclusions in this particular index review. So Bank of Baroda and CG Power are likely to make the cut as far as inclusions are concerned, and Biocon is likely to be excluded in this particular index review from MSCI. Now, the other stock that is in focus is actually Kotak Mahindra Bank. A very interesting update from the company. Along with the results, the company also gave its latest updated shareholding pattern to the exchanges. And as per this latest shareholding pattern, the FII holding at the end of December quarter stood at 42.69% versus 42.85%. That indicates that there is not further FII selling, which indicates that there is now not much headroom as far as MSCI is concerned to a weight increase as far as the index review in February is concerned. A slight negative as far as Kotak Mahindra Bank is concerned. Now, staying with Kotak Mahindra Bank, also remember FTSE is yet to go ahead and give a weight increase as far as the bank is concerned, in line with the bank's weightage as far as going up to the sectoral limit of 75% is concerned. So what Nuvama is expecting is that the FTSE index will most likely include Kotak Mahindra Bank in the March 2023 review. However, this particular inclusion would be staggered over a period of multiple quarters, so the actual flow may not be that high. We are also expecting NSE indices, at the end of February to include as well as exclude some changes. Nuvama this time around is not expecting any major changes in all 3 of the indices.
All right, Vivek, thanks so much for getting us all those important details, and especially about Kotak Mahindra Bank. And as we slip into a short breather on Business Lunch, here's a quick programming note update for our viewers. CNBC-TV18 has compiled a list of the top 20 stocks to watch out for in this year. And it's a carefully curated list of companies that warrant a closer look in 2023 based on factors like growth prospects, new launches, management changes, reforms, etc. As a disclaimer, this definitely is not a recommendation list, but a list of companies which have meaningful triggers lined up this particular year. Tune into CNBC-TV18 tomorrow at 10 a.m. when we will give you a sneak peek into the names and reveal the list. For now, a short break and back on Business Lunch. Welcome back. You're watching Business Lunch, and market looking in good shape at the moment, trying to perk up. 18,100 looking to be conquered once again by Nifty 50, and Bank Nifty is really being supportive. Talking about banks, let's also take a look at Axis Bank's preview of the results to be announced, and our in-house banking expert Abhishek Kothari joins in with all the details. Abhishek, what are we expecting?
Well, Nisha, like peers have reported, private banks are reporting good improvement in their net interest margin, which is leading to PAT being ahead of pole. So for Axis Bank as well, you know, the analysts are expecting that net interest margin will expand YOY and quarter on quarter. So Phillip Capital estimates a 9 basis point improvement in its net interest margin. Phillip Capital estimates loan growth of 15.5% YOY and about 5% sequentially, largely to do in line with what the industry growth rate has been. Total watch list was around 8,000 crore and the restructured book close to 3,000 crore. How these move will be seen very closely. Asset quality to improve. Phillip Capital is expecting a 10 basis point decline in gross NPA ratio to 2.4% when compared to 2.5% in the previous quarter. Slippages expected by Phillip Capital is around 3,500 crore, which is compared to about 3,383 crore in the previous quarter. Management commentary with respect to growth and credit costs will be seen closely. One key important that private banks results have stood out is the one who have seen deposit growth are getting rewarded more. So you need to watch out for the deposit growth as well. Our polls suggest NII growth of 26.5% YOY and about 5.7% sequentially. We are working with a profit growth of 51.5% YOY and about 2.7% sequentially. Back to you.
All right, Abhishek, thanks a lot for getting us all of those estimates as far as Axis Bank goes. The stock is absolutely flat ahead of its results. It's blinking red and green. But with that, we're going to wind down on this edition of Business Lunch. From Nisha, me and the entire team, thank you very much for tuning in. Mid-Cap Radar up in a bit.